Our second video of the day features Lloyds Banking Group. If you are not a subscriber of our YouTube channel, then feel free to subscribe and you will get regular videos such as this one for UK shares. There are a few features that we want to point through. The first is the long-term outlook. It was a downtrend, put in an inverted head and shoulders, and ever since then we've gone on a nice up rally. There's been a solid ascending trend line which has pretty much contained the price and pushed it higher to make higher highs. There is an interesting development though in this segment of the chart that we want to discuss in order to prepare for next week's trading. Because Lloyds is in an uptrend, we want to focus our strategy on buying the dips. We have got that ascending trend line to basically buy off of, and ever since we've been forming it, the stock has formed higher highs and higher lows in general. So the market has always gone on to make new highs. It put in its highest high, but put in a lower high, which could be a warning signal. However, if we go on and put in a higher low, i.e. if 73 to 72 pence holds, then we would assume that the market will go on and try to head up towards that 80 pence mark and at least retest the previous high. We are also under the 200-day moving average as well. However, our explanation for that is the higher the price goes, the more volatile the stock swings are going to be. Some of the things that we'd like to highlight is some extremely strong support levels that we believe will contain the share price. Hence why we want to be buying this. If you look, 72 pence has played a pivotal role. Every time it hits it, it seems to bounce off of 72 pence. We did fall below it here and needed to hit 70 pence, but we went on quite a bit of a bull run after that. We are at a stage where we are basically converging in two quite strong support levels. You've got the horizontal 72 pence, and you've also got the slightly longer term ascending trend line. So if you are bullish on this stock, that will be a good place to buy. We've also got a descending trend line that we will need to take out if we want to go on and make higher highs and let this bull run continue with Lloyds Banking Group. We think that the risk versus reward favours those buying at this level because there is a few converging supports. So we think Monday, Tuesday will be a very good buying opportunity for Lloyds. If we close below 70 pence or start closing below 70 pence per share, that is a big warning sign. Some people might want to think of this as a head and shoulders topping pattern, but we don't think so. We have to be aware of it because it does sort of resemble one, but we don't believe that is a head and shoulders in play. We just think that's just the way that the market sort of forms. So the warning signs would be below 70 pence per share. We would want to liquidate our longs because that's pretty much the line in the sand. It must stay above 70 pence per share. We have got a full trading plan for Lloyds Banking Group. So if you click the link below the video, you'll be taken to our website where you can see the full detailed plan on Lloyds.